Hello viewers, we'll be going over natural gas. In this video, we'll be using the day-by-day probability model, the technical performance of each model, how we find the models, comparing the current trend with the trend in the past, and we'll go over the day-by-day forecast for natural gas. So back to the technical analysis. Natural gas is currently up 1.3% on the 1 hour chart. We are nearing overbought RSI. We see a slight divergence on the 1 hour MACD, and we are encountering slight resistance on the 200 moving average. As for the 4 hour chart, there is also a 50 moving average resistance, and we also found temporary support on the 9 moving average. We have now reached to positive MACD. If we extend that further onto the daily chart, we see a possible sign of a reversal. However, I do want to see today's candle to close above the 9-day moving average, this blue line. If we do, we could see a possible upside momentum, and we also see a slight signs of a convergence on the daily MACD. So now let's head over to the day-by-day probability model. Again, these models are now available in the link below, so do check it out. So as we progress to the 7th day, we have a 42% chance for natural gas to climb higher between 0 to 8%. And to extreme case to the upside, we have an 8% chance for natural gas to climb between 8% to say 16%. And to the downside, we have a 42% chance for natural gas to fall between 0 to negative 8%. And to the downside extreme case, we have an 8% chance for it to fall between negative 8% to negative 16%. So now let's examine the day-by-day forecast for natural gas. So we have 1 day out, that'll be a Tuesday, and 2 days out will be a Wednesday, and so on. So we have 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is best matched to the current trend. The blue line is our current trend, and overlapping it happens to be the best match. And we have here our current trend, and below the trend that we found on the line graph. And this trend dates back to September 11th to December 7th, 2009. So let's begin comparing both trends. So we start off at the bottom Bollinger Band. Then we see sideways price action, and we see 2 instances where we dip lower below the middle Bollinger Band. And right towards the very end, we average below the middle Bollinger Band towards the end of the trend. And on the trend in question, we start off at the bottom Bollinger Band. We see sideways price action, both dipping below the middle Bollinger Band. And then towards the very end, we see it average below the middle band. So what we have here is 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points on the current trend. So there's reason to believe that the trends and patterns are somewhat the same. The outcome and forecast should be fairly the same. So the model that we just examined, it was back in September 11th to December 7th, 2009. Back then, natural gas was up around 8.2%. And if we head back to the day-by-day probability model, that coincides with this standard deviation of 8% between 8 to 16% in the next coming days. And if we examine closer on the technical performance of each model or each trend, on the current trend that we're currently in, we're only down 39% from monthly high, up 4% from monthly low, down 75 basis points from 10 simple moving average, down 4% from 20-day simple moving average, and down 13% from 50-day simple moving average. Now compare that to the trend that we just examined. Back in 2009, the trend was down roughly around 31% from monthly high, up 7% from monthly low, up 1.6% from 10 simple moving average, up 1% from 20-day simple moving average, and down 10% from 50-day simple moving average. So among the two trends, there are technical differences. One is in the 10 simple moving average. Back then, it was up 1.6%. Compare that to the current trend, which is down 75 basis points. And also the 20-day simple moving average. Back then, it was up 1%. Compare that to the current trend, which is down 4.2%. So do keep that in mind. Again, these models are now available in the link below, so do check it out. If you enjoy this content, feel free to like, comment, subscribe, and thank you for watching.